Hello, Jason here. Today is December 17th, and this is your aftermarket update. So we had another good day here at the Oil Trading Group. In fact, this is winning day number 17 out of the last 18 trading days. I'm going to draw your attention up here to the top right-hand corner of the screen. You'll notice the balance here on our 150K combine that we are taking here this month. We started this on November 19th. We're about one trading month into this, and we're up about $4,000. You can see here that we had a gross P&L today of $460, $18.40 in commission, and a net current day P&L of $441.60. So again, this is on the Top Step Trader Combine. We are continuing to push through this combine, and we will continue to post these results of this combine as we continue to make our way through it. But again, we have had only one losing day since November 19th. And again, it has been a nice run here. So today's trades we have been getting into. Let's talk a little bit about what we were seeing in the market today and what got us into our trade. We were done relatively quickly here today. In fact, I think it was we were done here by 9:15 a.m. at the latest. What you're looking at here is a daily chart. This is on your continuous contract, on your integrated trader here by CQG. And you can see our pitchfork. And inside this pitchfork, you can see that we did have, it's a little bit difficult to see, but you did have a little bit of oversold conditions or overbought conditions here. You came up over the top of this channel here, but we have subsequently made it down. So you've got 3 studies working here. Actually, you have 5 studies. 6 studies. You have 3 moving averages. This is the 200, the 100, and the 50 period SMA, and you can see how they're all pointed to the downside. You have an Andrews pitchfork here drawn to give you the center line, which I believe is where we're going to ultimately be heading as we go into the next, right into the Christmas break here. And also you have a range extension measured from this range here that gave you the 1.27% range extension. That 1.27% range extension is going to play pretty well today here. You're going to see not just this range extension, but a couple of different measurements, and I'll show you here in just a moment. But again, we came right down really close to it at 35.82. Also, we began to hug the center line of this channel here, and I would expect us to go test the bottom of this channel here over the course of the next couple of days. And if we do test the bottom of this channel, this will be putting us into lows that we haven't seen since the end of 2008. Let me show you what I'm talking about. You take a look here. At the end of 2008, you have a level down here, right here at 32.48. And this is the 08, December of 08, January of 08, and January of 09, and February of 09. And we haven't been this low since now, December, almost 6 years later since we've been to those lows. So I expect us that we're going to probably come down and test those maybe tomorrow. Another reason why I feel that way, one of the things that we look at here consistently is that we know that the high or low of the week is made on a Monday or Tuesday. The high of the week was made here. If you come back to this swing high, this prominent swing high on the inventory report last week, and you drag it down to this low on Monday, we came right up into our sweet spot, giving us a pretty decent indication that we should see a continued sell-off, and that is indeed what has happened. We've had this rally up into our sweet spot at 70.5, and then this failure down, and I would expect that there is a really good chance that we come take out, or at least test, if not take out these lows down here on this contract at 35.77. We'll see what happens as we get through and continue through the week. Let's talk about where we got in today and why. Again, we start everything with a 2-lot. So 44 ticks here. We started with the 2-lot. As you know, we like to pyramid into positions. We have not been doing that as much recently. Again, we take what the market gives us on most days. And what the market has been giving us recently are a little bit of jagged moves, right? We are in the middle of that holiday period between Thanksgiving and Christmas, which is notoriously challenging trading times. In addition to that, we had the FOMC meeting minute yesterday. We had the crude oil inventory. We are in contract rollover week. there are a lot of reasons why you want to take profit at smaller targets versus trying to let these things run. Once we get back into the first part of the next year, there will be plenty of time to resume the pyramiding schedule, and we will actively be pursuing that. But right now, as we talked about yesterday, we are slow and steady right now, right? We are getting into a trade with a 2-lot. And again, mind you, this $4,000 in less than one trading month has been all starting on a 2-lot scenario. So again, we're getting into these 2-lot positions, taking one off fairly quickly, and then today, like we did, we wrote it to a target. So let's talk about what we were looking at today that caused us to get into a trade here. So I don't have any of our OTG support and resistance levels shown on this chart. I just want to kind of show you what the thought process was coming into this. Here was yesterday's high down to the low here. Actually, we'll do it this way. We'll go into, we'll come back to that in just a moment. We'll come here to this high down to today's low. So when we made this high down to today's low, we had a level here at 84. It's a little bit difficult to see, but that red line is your sweet spot, and that represents, and I'll do it out just like this a little bit so it's a bit easier to see, but that is right there at 36.84. So we came up into this 78.6. We failed underneath it, and then at the open, we reached out to 37.05, which was the ETH session price, and could not push through and make a new high. This was our indication that we were going to be looking to get short again, and I'll turn on the other levels here in just a moment. But one of the things that we look at as well is this book map, and if you're not familiar with this, you should come in and talk to us about it. But the whiter and the more bright the white is on this scale, the more liquidity rests in those positions. So this morning, when we were getting up into that $37 range, there was plenty of liquidity providing resistance up there, and we had another level, one of our major areas on our chart. We call it our red break area. This will turn on in just a second. And then this was a major resistance point, and once we got this candle up into this area, this is a 15-minute bar, long wick up, candle body down. We were looking to get short in this area. In fact, we got short. The reason we had two trades here today is we ended up getting short at 93 that took me out at break even. And then once we cleared this 84 level, I was short yet again at 83. And we took one off at 11 ticks, and we let the other one run all the way down to this 40-41 area. So let me come back this direction with you. You grab this swing low and you measure it up to this swing high, right? So we came down and then we measure back up. Then we got to this swing high, and the sweet spot down here, the support level, is the middle of that is 41. We had the 78.6 at 43. So we took profit right in this area here. So you'll recall that I mentioned a 1.27% range extension, and that would be a key player in what we were doing today. So I'm going to turn on these secondary levels, and you can see that the low that we hit. Now, we didn't trade this today. In fact, we got out there at that just below that previous session low, and down there at the 41 for a nice trade. Again, we were 46 ticks total net, right? 46 ticks total net. But as we came down in here, the market really paused, right? It wasn't much longer after that. We came down into this 1.27% range and just kind of rotated for the day. If you'll notice, and it's hard to see here, but in the bottom left-hand corner of the screen, there was only 112 ticks from low to high today. That makes for difficult trading conditions as well. And because we were switching from the January to the February, it was all the more reason why we stopped. But coming back to this 1.27, this 1.27% range extension was from yesterday's range. And if you measure this range right here, okay, so we're going to measure the length of this range, and we are going to say what is the extension off of that range. Whoops, I went the wrong direction with it. We'll come back here and we'll measure, well, let me try it again. Sorry, one more time here. We'll measure the length of this structure right here. Okay. All right, for some reason, let me refresh this. Sorry about that. All right, let's try this again. Ninja's behaving a bit off kilter here. All right, well, what I would like to have shown you, and it's not cooperating with me, is the length of this range right here, the 1.27% range extensions right down here on top of this low. And so again, that is another area that gave us gave us confidence that this was going to be a landing spot. But again, we took this trade out of this zone here that I talked to you about, and we ended up positive those 46 ticks gross, and with commission 44.2 ticks at the end of the day. So again, all in all, another very good day here at the Oil Trading Group. We will try to end the week here really without a losing day this week. I'm going to see if we can't get the car into the garage for the weekend without a losing trading day this week, and really try to make this 19 winning trading days out of 20. We'll see what happens as we get into it tomorrow. We are still dealing with some difficult conditions, option expiration, and it will really be the final day for all the practical purposes. Monday is the final day, but for all practical purposes, from a volume perspective, Friday will be the last day of the January contract. So again, as always, I want to say thank you for spending time watching the recap videos here at the Oil Trading Group. And until tomorrow, I want to wish you good luck and good trading.